Hello and welcome to the stock market analysis. Let's look at Supermicro Computer. Wow, you can see the stock actually crashing 23.14% in a single day. And if you look at the definition of a bear market, it's 20% below the highs. And if you look at, let's just take a price range from the highs to the current price, the stock has lost more than 41.51% in a short period of time. So whether you like it or not, we are in bear market territory for the stock. But let's see if this is a good time to buy this stock or not. Now, if you have watched my analysis in the past, you will know that this was a very significant area of support for the stock. Why? Because it actually broke above a triangle pattern in the daily chart. And the apex of the triangle is very, very important. It can be a very significant support area, which is why the stock climbed up and dropped, form bottoming tail here, go up, drop, go a bit, drop, but always going back up because there's support. Only when Friday it gapped down significantly, and this started a waterfall cascade lower. The entire day it was just red all the way. So when a stock drops below a significant area of support, there is bound to be a lot of heavy selling. Now let's take a look at the 5-minute chart and you'll understand a lot more. Okay, when the stock is below the 200 MA in the 5-minute chart, below the 50 MA, below the declining 20 MA, this is ripe area for it to have a waterfall kind of crash. Do you see the moment it opened? Try to move up, form a topping tail, and that is when all the selling begins, boom, all the way. And then it dropped below this consolidation, break below it, which this could be a sell area where you sell it, put a stop loss above, it move lower, and then we have another consolidation breakdown around here where you can actually sell short or put a stop loss and ride it lower. Of course, you have to cover by the end of the day. So we are still below the 5-minute 200 MA. It's not a very good idea for you to long stocks overnight when it's below the 5-minute 200 MA. Also not a very good idea for you to short the stock intraday. Not a good idea for you to long the stock intraday if it's below the 5-minute 200 MA, unless it's for an oversold bounce up. If you look at the hourly chart as well, you can see that this is a support area. This was the apex of the triangle, and you can see the moment it gapped down and slashed below the support area, palm all the way down. So at this moment, the stock is still very weak. You might not be a good time for you to shop for this stock at this moment unless it goes back up above the 20 MA. So the stock actually, let me just draw this downtrend line. It actually tried to break over the downtrend line but quickly fizzled out. And if you look at the chart pattern, this is a declining trend line. You can actually draw a trend line here. What does it look like? A descending triangle, which shows weaknesses because stock goes up, cannot go above the highs here, decline, go back up, cannot even go above the highs here. So there is constant selling pressure every time it goes up. The descending triangle, once broken below the support here, is a bearish continuation pattern if it's a downtrend. But if it's at the top after a nice rise, it could also signal weaknesses in the stock. Then sometimes you can actually take the highs of this pattern. Okay, this is the height of it. Let's just clone it and project it from the breakdown. You can actually find a target. That is for the worst case scenario here. Okay, there is probably where it might meet the 200 MA. I'm not sure. Okay, maybe around here, the 200 MA, but if you were to follow the descending triangle target seriously, it will be around here, 486. Not trying to scare you, but that is something you need to take into consideration. That is something you need to keep at the back of your mind, and that is the predictive value of technical analysis. Now, having said that, there is support here because it's a prior low support where it corrected from bottoming tail and then moved back up. This is a support area which is trying to, at this moment, you can see in Yahoo, there's pre-market is up 14 bucks. 2.07%, a very small percentage. So you want to watch the support area whether it holds. If it does not hold, we might see the stock decline. But let's take a look at the weekly chart to see if there is any long-term support. No, at the moment, even monthly chart, there is no support like a prior high or consolidation in the past. So there is a possibility if support does not hold, you might see it drop to around here. So when there is a big large candle like this, here is what I'd like you to do. First, you want to take the half of the candle rule. This is about a half of the candle, the entire length of the candle. Take half of it, and you want to see and observe what the stock does in the next few trading days. If it tries to go up but it stays below the lower half of the candle, then there's a danger that the stock is getting weaker and you might see it cascade down. The other way is to divide the large candle here into thirds, 1/3, 2/3. Okay, you want to see whether it can go above the 1/3 or the 2/3. So if it can go above the 2/3, that means there is a possibility and hope that it might go back up. This is a support area. But if it can't even go above the top 1/3 of this red candle, then you know it's very weak. Soon, within a few days, it will just continue selling off. So that is a very useful thing when it comes to large red candles. Now, the other thing is, was a very significant area of support. This is the apex, and technical analysis will teach you that once an important support is broken, what will it become? A bad resistance area, really nasty resistance area. The stronger the support that is broken, the more nasty a resistance area it might be. So I color it red so that you can see it needs to go back above this downtrend line for a sustainable rise in the future. Let me just extrapolate it. It needs to go back above this downtrend line. And if it cannot go back above this resistance area, it might just trade back up and hit resistance and sell off further into the future. So that is something for you to consider, take in mind, put that back of your mind, not to just go into the stock, right, blindly, but to really be patient and wait things work out. Now, seasonality does play a role in stocks as well. So you can go to stockcharts.com, go to the seasonality chart, and look at the seasonality from 2020 to 2024. You can see in April, stock has not been very good in April, closing higher only 40% of the time. So we just have one more week to go, right? One week plus, I think, for April to end, right? So it'll be around here, right? Trading up to around this area. This is May 1st, is here, right? Seasonality tells us that it closed higher only 40% of the time. Average loss is negative 3.5. But May, June, and July are good months for the stock. So let's say if the support holds all the way till May 1, and then it eventually breaks above this downtrend line, you might see the stock moving higher in May in the future. So looking at seasonality and the stock chart, the bearishness, you might want to wait for it to stabilize, and then May you think of long the stock. Okay, it has gone up 75% of the time with a gain of 34.6 in average. 75% gains in June, but not so nice. It has gained 0.6% in June, which means, well, maybe in the past there's a lot of consolidation in June, but July it has went up 100% of the time with an average gain of 20.3. Okay, so let's go to the weekly chart. Just allow me to delete all this, remove all these drawings. Let's use a Fibonacci retracement, say from the swing lows here, the gains up to here. Right now we are at the 50% okay, retracement. Rising 20 MA might offer a support. This is a weekly chart, remember. So we do not want it to go below the 50% retracement. If it goes below the 50% retracement, you might see it drop to 61 and then maybe even 78%. So this will be an important area for you to look at, and this is why it stopped falling at the around this area, because it's a 50% retracement. So maybe we want to watch for it to stabilize, for support to hold. Definitely you want to wait for a bullish reversal pattern in the weekly chart as well. So I hope that this analysis is helpful to you, right? And I'll see you in the next one.